Mike and I had the philosophy back then, which was 3 months in a coma. Can either of us be in a coma for 3 months and this business survive?
What are the challenges in quickly growing and building out the team that you're facing?
We're the kind of place where you can come and get consumer information that helps you with identity, affordability, proof of address, or contactability. We're talking about like deep knowledge of your customer. We're talking about like gambling patterns. We're talking about how often you're ordering Uber Eats.
I might be getting into a bit of your secret sauce here. You can't really get much more personal information than someone's bank statements. But how do you get this data? And how did you do this at such scale?
Kind of over 200,000 queries per month is kind of where we're running at.
Every growing business goes through this. It's not just around can we grow, it's where should we grow. It's this difference in the word could and should.
It was more just a narrative around trying to do more with not just throwing people at the problem.
What is the biggest thing that you're still figuring out about scaling? Hello everyone, and welcome back to the Founder Files. Today, I'm chatting to Chris Ball from Finch Technologies about a topic that everyone who's gone past product market fit will know truly and well, and that is where to focus, right? Where do we focus our attention in terms of the challenges of which growth strategies we can go down, and now all the ideas that we have and solving customer problems that are coming to us, where is it that we really focus? So we really unpack the nature of what Finch Technology is as a business. We talk about some of the products that they have within their suite, the ones that are really scaling, how they manage to scale them, and just a bit of an understanding, obviously, just around the value prop and how the business works. But then we really get into these topics around where is Chris and his co-founder's attention going? How do they protect their team from the noise, right? What are these decisions around like where to grow the business and how to focus it? And at the end of the day, looking at how they're going to be really scaling this moving forward and the challenges that they're facing in specifically looking at their growth strategy. So it's a really fascinating one because it's not just around what got you here and what's working. It's really looking at all these options around the next step and where the challenges are focusing, which every founder that's been through a stage will resonate with. And if you are at the stage or coming up to the stage around product market fit, it's going to be very valuable for you. So enjoy. Welcome to the Founder Files, the podcast that's like eavesdropping on a conversation with a successful entrepreneur over a fireside chat. Join me, Cameron Coots, through this unique experience of unfiltered stories and insights from scaling founders around the globe as they share their ups, downs, and everything in between. Chris, welcome to the Founder Files. After a couple chats and even joining us in our Supper Club event last year, it's great that we're finally sitting down to have this conversation as someone who's building fintech products and really has got multiple out in the market. I think it's going to be a great, insightful conversation for any tech founder out there, really, any professional service founder. And I think this is going to be a great conversation. So welcome to the Founder Files, and it's great to have you.
Awesome, Cam. Thanks so much for having me and all your hospitality through all those conversations and dinners.
My pleasure. So just obviously to kick it off, right? Tell me a bit about Finch, right? As a business model, educate the audience on what your company is.
Cool. So Cam, to explain Finch, probably the best way to go back is why and how Finch happened. And I'm not going to go into all the details of it, but always had an entrepreneurial kind of bone in me and really wants to get something done, as did Mike Barron, my co-founder. And we came to the realization, or our view of the realization, that there are two scalable pieces of the South African market. One of them being fintech and the other one being food. So we tried doing something in food, and
sorry, I actually, before you continue, I just want to go back to that insight. Why fintech and why food? Of all like possible things and industries, how did you conclude that those are the two scalable parts?
So South Africa really has, both of those industries have scaled significantly in South Africa already. In South Africa for fintech, people talk about financial inclusion. Funnily enough, I think our financial institutions have done a really good job of distributing product and including people into product. And you've got a really well-built ecosystem that you can kind of thrive off. And, it's servicing the majority of South Africans already. So you can easily say that you can touch into 60 million people. And with food, it's not dissimilar. People need to eat and they need to kind of satiate themselves. And you look at examples in the market, and KFC is kind of the crazy one out there. It's got over 1,200 stores already in South Africa. Per store, I think KFC might be KFC South Africa might have the third most stores in the kind of a global franchise, and they're still carrying on trying to roll out to 200 a year. So just the market is there for both of those products, and it's not something where you have to go reinvent the wheel. These are services that people are using, and you can tap into it. So it's not really about going and reinventing anything. It's just about entering into it in what we hoped was going to be a smarter way.
Cool. Makes sense. Thank you.
Cool.
Continue.
Yeah. So going back onto it, we'll touch on it a bit later, but my first kind of part of my career was with Lendico, which is a peer-to-peer lending network. We picked up that people weren't getting the most efficient form of funding, and Mike and I were like, cool, here's a problem we can solve. So we went about solving the problem, put together WordPress websites with Capitec, Standard Bank, Wonga, and we made Standard Bank the cheapest kind of bank to get a loan from. And we thought, great, if a certain amount of people click on Standard Bank, someone at their analytics team will give us a call and say, hey guys, let's do work together. After about a month or so of sending lots of volume, including lots of my own volume, we kind of came to the realization that, one, that's not how business really works. And then two, I don't know if anyone actually was looking at the analytics at Standard Bank. Or the third version is actually our volume didn't matter at the end of the day anyway. But where we did get to was building up these relationships with the non-bank lenders at the time. So the non-bank lenders gave us the view that, what they needed to solve was, one, distribution. So they need to sell more product. And unlike banks, they need to manage the risk coming in. So they can't just go and accept anybody, because they can't sell them a funeral product. They can't sell them a savings product. All they can really have is the ability to offer them a loan. So they wanted more demand, but also the kind of demand that can convert into actual deals. And we also kind of engaged with them at the time about some of their other problems. The other ones being that they felt like they're falling behind the technology curve. Unlike large institutions, their inability to spend in terms of tech to upgrade themselves. And then the last one was really around data. So they know that there's a lot to do with data, but they were kind of using it in kind of a very simple way. And they wanted to figure out ways to do more with it. So we went about trying to solve just the demand problem to start off with. We created a product called Finch Tech, and we did integrations into about 70 different financial service providers. Very much an 80-20 kind of rule though. So we weren't working with all 70 all the time. We were very much working with the 20% of those guys.
I mean, the fact that you still managed to integrate into 70 straight off the bat is still quite an impressive way to start.
Yeah, it also tells you where the market was at. The market was hungry, the market was tech enabled, and people were keen to do things. And we helped them scale. And during that time, we felt we built a nice little business. We were doing well, and there were only 4 of us. We were profitable and scaling, and maybe we started feeling like we were getting a little bit too comfortable there. Mike and I had the philosophy back then, which was 3 months in a coma, which was, can either of us be in a coma for 3 months and this business survive? And at the time, we felt the business was in that place. And maybe we were resting on the laurels a bit, and we didn't kind of innovate up the curve fast enough. But there was an event that kind of came and smashed us across the face, and that was COVID. So I can vividly remember kind of March 2020, I was sitting in my spare room, which, lots of us were at the time because that's where work was being done, and getting calls from all of our partners saying, hey, Chris, or them calling Mike and say, hey, Mike, we don't know where the world's going at the moment. We don't understand the risk that's out in the market. We cannot go ahead and offer product the way that we've been offering product. We're going to stick to managing our base and managing our risk that way. And what that meant for us was that revenue dropped 20 times. So it wasn't just an event
20 times, not 20%.
20 times, not 20%, 20 times, yeah.
Yo.
Which is a deep kind of thing to go through. And I think, I used the analogy of looking on our belly buttons, which maybe was also partially caused from overeating during the early kind of lockdown stages and under exercising. We looked at our belly buttons and thought, what do we have? What do we do? And is there anything that we can do to kind of remedy this? So we had a team of smart young people. We had these kind of partnerships. We had the history of the relationship about talking to these financial service providers about origination, data, and technology. And we thought we knew quite a bit about tech. So we embarked on pivoting the business to where it really is today, which is a data API marketplace. And what that means in a longer form, but maybe more simplistic, is we're the kind of place where you can come and get consumer information that helps you with identity, affordability, proof of address, or contactability. And it's that information that really can drive, risk-taking businesses to build more detailed models on people when they're onboarding them, and also manage that risk a bit better over time. And that's where the business is at the moment.
So in essence, know your customer for financial services businesses.
Yeah, know your customer, but beyond just the kind of pure definition of KYC, we're talking about like deep knowledge of your customer. We're talking about like gambling patterns. We're talking about, how often you're ordering Uber Eats, and kind of giving a lot of the financial insights that we can get by consuming banking data.
All right. So, that's my question there is like, why is it that you are able to provide them with that data? Why can't they get it themselves?
It's a kind of question that we've asked ourselves a lot. And we kind of carry on asking ourselves the question. So the way that we've gone about, let's focus on the affordability model. The way that we've kind of focused on the affordability module is by emulating bank accounts. So that is logging into your bank accounts and accessing the information that way. It is a hard thing to do in a secure way, and really hard to manage. So when you talk to customers about why they select a service provider to do that, I think their honest answer is that they don't really want the admin of having to change a whole bunch of code when Capitec makes a change to an element on their website. Or, an event that happened yesterday, Capitec changed their bank statement. So does MTN really want to go deploy a team to go and change their parser? And would they be nimble enough to change their parser within the time frame that we are able to do so? So we ask ourselves the question, why can't people do it themselves? And the reason that it is because it's complex, it's technically hard, and you also need to be able to be nimble enough to manage the changes that come through all the time.
Gotcha. Yeah, that's also it's a fundamental problem that corporates have there, where they've got scale, they don't have speed. Right. So that makes a lot of sense. Right. So like, obviously you started with Finch At Now, but and now you've, as you say, pivoted into this API and data marketplace. Right. Now, tell me about where the business is at now. Because you've got multiple products out there, servicing multiple customers. Like you've got 75 FSPs that you're contracted with, if not more. At least that's according to what your website says. Right. Give me a sense of where the business is at now. It's obviously been because loads of pivots have probably happened since COVID.
Yeah, and lots has happened post-COVID. So I think, post-COVID, what we saw is, or during COVID, we kind of saw the tanking of the comparison websites, being it Fintech and Funding Hubs. So those businesses really tanked post-COVID, and they've kind of come back to some form of normalization. And so we've got these two kind of cash flow generating marketplaces that help us out. It's a little bit low touch. They're harder to scale than we initially thought. And a lot of our focus has gone in together, which is the API marketplace. And so where we're at, it's a team of 16, 17, I think actually now.
I thought it was 18 according to LinkedIn.
Oh, I'm obviously forgetting someone, which is a little bit awkward. Maybe I'm forgetting myself.
No,
so it's 18.
Well, welcome to being a scale up. Changes quickly.
Yeah, exactly. It changes quickly. Um, we do have close on to 70 clients. I think a good split between 50% of those being for the kind of API marketplace and the rest being for the kind of comparison websites. We are growing rapidly in terms of revenue, but facing kind of consistent scaling kind of concerns. Both technically sales orientated, people orientated type of thing. And working with some of South Africa's largest financial and mobile institutions, where they're trusting our technology to power their backends, which is a really cool place to be in. But it's a challenging one to manage as well. Working with large enterprises comes with some kind of concerns, and maybe that explains a few kind of lines across my face or some of the sleepless nights that we've had over this past while.
Yeah, no, 100%. I mean, look, you've even mentioned now scaling challenges. You even said there's like with Finch Tech, for example, and being difficult to scale, like a lot of this merging into what Gather is. So I obviously I definitely want to get into the scaling stuff. That's the whole point of the podcast. But I still really want to understand the value and business model of what it is that you're delivering in the market. So this makes a lot of sense in terms of like this agile approach towards gathering customer data, because data is really king, specifically if you're in the direct to consumer space. And also there's, to your point, like one of the biggest problems is risk, right? It's like, how is it that I can ensure that I'm giving someone the biggest product that I can, just even from a loaning perspective, but no confidently that I'm going to be able to get that money back. Because I was like, I want to be able to give as much as possible, but obviously manage that risk at the same time. And a lot of that is determined by behavior rather than just credit scoring. So I think that's really fascinating, and I can start unpacking the value there. But when we talk about, what do you mean by the term marketplace, right? In this sense, because like, are these FSPs your clients? Like, where do you get paid, right? How does the business model work?
We get paid every time there's a successful query to our APIs. So what that means is, if the FSP needs to gauge the affordability of an individual, they'll either ask us to do an emulation of that individual's bank account, or send through the bank statement of that individual, and then we'll extract the transactions from there and feedback the information to them. It's very easy to give them just the full array of transactions, but it's a lot harder to then go give them the categorized transactions and the insights to it. So when they're querying us, they're not just asking for every single data point on that bank statement or within that banking profile. They're also asking us for the categorized transactions and a little bit of the insights around that individual. And that's kind of where some of the difficulties came in. Also, I mean, one of the things that you and I have spoken about before is, going into this, I thought, let's give these enterprises really clean, concise, tagged data, and they'll have much better modeling capabilities, understanding of risk, understanding of what they want to do. But one of the learnings that are kind of coming across now is that they are asking us to do that. So I had a call with one of these large enterprises the other day, and explaining all these cool things about, how you can see gambling insights at certain times of the month, or, can you use someone's Uber Eats delivery profiles as a way to understand whether they're the type of guy that plans their meals, and how does that link to their propensity to pay? And he's like, cool, that's all great, and I love that data, but please, can you just give me a score? And that was kind of this realization, one, that, my initial underwrites as a problem wasn't 100% spot on, and a bit of a view of about, where the market is, especially in the larger kind of enterprise space, about the responsibility and delegation of duty, and the role that service players provide in that.
Elaborate on that last point, please.
As an executive at a large enterprise, you are responsible for the outcomes, and that you want to be able to hold someone else to a standard that you require. And can you pass that on to a service provider to do to you?
Right. Yeah, because service providers are a lot more fireable than employees.
They're a lot more fireable than employees. I'd never thought about it like that, but maybe that's why. but also the kind of skill and competence that we have probably promotes us to be better at it. And the reason that we can be better at it is because we're working across different institutions. So through the 40 odd enterprises that were not all enterprises, but through the 40 odd companies that we're working for, we obviously got a broad spectrum of information that we're acquiring. And although we're not kind of co-mingling data, because, FSP1's data is FSP1's data and FSP2 data is FSP2 data, but the kind of way that we're able to build our models helps enrich every single base. So let's use categorization as a simple one. The ability to build a great categorization model relies on lots of data. And because we're able to get lots of data and categorize it, that then benefits everyone, from the large enterprise that's using it to maybe the guy that's only pulling 5 bank statements a day. So there's kind of shared value across the platform due to the amount of data that we're able to get in, digest, and work through.
Yeah, that makes a lot of sense. I also had this big grin on my face earlier because just around the categorization points and why, like, I'm a Discovery Bank client. And so obviously where I get punished in terms of my Discovery Money status of like gold versus, diamond being dropped down to gold. If I spend too much time leaving uncategorized expenses uncategorized, then it's like, no, from a budget perspective for you, you don't really know where this is going. So we're going to punish you until you fix this. That's like actually from them on a data perspective, they get to know exactly down to quite a really minute level of detail where people are spending their money.
Yeah.
And so I might be getting into a bit of your secret sauce here. So obviously either forgive me or I'll trust you to maintain the boundary. But how do you get this data, right? I'm just thinking there's like, are you plugged into banks, right? How did you manage that? Because I mean, that's like Fort Knox really from a governance perspective. Or like, have you gone direct to consumers and getting them to give you approval? And then it's like, I mean, you can't really get much more personal information than someone's bank statements, right? In terms of what they're spending. How did you get this? And how did you get this at such scale?
Part of this is a roadmap towards open banking. So open banking has been a thing in the USA, Europe, Saudi, lots of other places around the world other than South Africa and now. And although South Africa's laws, regulations, or processes aren't quite at open banking levels, we're slowly moving in that direction. So good examples of open banking would be Capitec Pay or Absa Pay, which is the API integration from a Stitch to Capitec to allow payment. You probably see it on Takealot as a great example of a business that has direct integrations to banks for payments. Instead of payments, we work in the data field. So data is always probably 1 or 2 steps behind where payments are. So we see the world moving towards open banking around data. But there's a bridge that we need to take to get there. So the way that we get the data is obviously consumer initiated, where they provide us their credentials to log into their bank accounts, and we emulate the bank's APIs to query the APIs that essentially render what it looks like on the web view. So if you're looking at your Discovery web view, we're querying the API that's sending the information to their front end and extracting the information that way. Or the other method that we get the data is through bank statements, scanned, PDF, emailed, sent through USSD. And we've created lots of different ways essentially to get that information into our ecosystem, extract the information, and then provide insights.
So why are consumers giving you this data? So I'm thinking about myself as like, I've never seen like a window or an interface pop up where it's saying, do you give Finch permission to or gather permission to be able to utilize this data, unless it's been so baked into the T's and C's that I've just accepted it. Or maybe you don't have my data, right? It's like, why do you consumers hand this over to you, and how do you get them to you?
It's very consumer initiated. So all of the stuff that we do is led and managed by the consumer. I've got a deep kind of philosophy that, one, the data I create is the data that I should own, so I should be able to manage and distribute the data however best I feel. So your kind of question leads to, where is the value for the consumer to be distributing this data. Typically, this value is for them to get a financial services product, be that a loan, a personal loan, payday loan, home loan, all the different types of things, or if they're looking to take out a contract. So one, it's a regulated market by the National Credit Regulator, where they need to conduct an affordability assessment on an individual to determine whether that individual can afford to pay off that obligation. And to do so, they need the banking transactions. So we've created an easier way for essentially the consumer to get that data and pass it on to the lender to conduct that affordability assessment.
And how do you get consumers to know about this? Or is it, are you essentially like integrated into like the front end of the processes for these FSPs? So you'll integrate there, and it's like what if I'm gonna go to Discovery as an example, right? And because I'm already a client of them, and I want to apply for a loan or an increase in my credit, they'll obviously have some of that data, but they might request other forms of data. Like like besides this, just validate like you're not a citizen in the US, like stuff like that, right? And so will you basically all the answers that I give to there, you'll get those answers too, or is it really a direct to consumer survey approach?
It's very direct to consumer. So like distributed through our platforms. So here's maybe a good example. Earlier or late last year, and Kate, my wife, and I decided that we are going to settle roots in Cape Town, and part of that decision was to buy a home. We went through the process of looking for finance. We applied for home loans at 3 different institutions. All of them needed a variety of information. So, and primary to that is obviously, affordability information. And being someone like myself, I'm multi-banked. So they needed, beyond my F&B account, they needed my ABSA details and my Discovery Bank details. So what was the easiest way for them to do it is they generate a link that is a link through to us. I put in my login information. Finch or Gather at the back end is processing that data and then returns it back to the bank that was querying that information at the start. So it's very obvious that you're providing your information, but it's very much part of the flow. So you'll go through what products are you looking for, how much do you need, please can you provide your banking details or upload your PDF. We then extract that information and then it moves into have you qualified.
Okay. So that helps me understand, because again, like I'm a psychologist and a strategist, right? I have no expertise in the financial services space. So just to confirm my understanding is that when at any point, the trigger point is an affordability assessment, right? That the main point is when, because there's no way of really accurately assessing affordability without seeing someone's banking information. And there is there's obviously informed consent and opting in from a customer perspective, but there's also the implicit things like, I can't check your affordability if you don't give me all your bank data, right? And it's like, you kind of know what you're getting into at that situation. And the person who's doing that affordability assessment will be the FSP. Right. And through an integration with their banks. And so it's like, here, please plug in your information here. And obviously they've already solved the problem of trust, right? It's like, why should I give you my bank logins? Right. That's like, that is the riskiest thing that you could possibly do, right? In terms of handing over that information. But that trust barrier has been solved. And what you do is essentially piggyback on that, right? And so the moment that information is provided, you now also have access to that information, and now you're able to utilize it. So although that affordability is done, that's where you go one step further. Now that we've got this information, this data, how can we understand this customer at a much deeper level? So although they might be coming to you for an affordability assessment for a house, there's all these other products that you might be able to offer them. But how do you position them at the right time, in the right way, etc.? This is me interesting. Help me unpack that.
So I think you've gone through quite a few points, but I think let's talk on to the trust one and the trust elements to it. It's like, for us, this is a kind of continuous thing. So if you're providing the service to Vodacom, it's relatively easy. Vodacom's a trusted entity. It's just part of the Vodacom flow. So take on rates of providing your bank details is high in the Vodacom. Versus if you are a brand new startup with a clunky website, it looks hell of a lot like a fishing expedition. It's not going to work. So
Or we'll actually use a practical example with Melon Mobile. I mean, when I had Calvin on the podcast, it's like a big challenge that they obviously had is trust, right? It's like, and it's almost this too good to be true thing around like what it is that we're buying. And it's like, okay, well, you're green. Why shouldn't I buy from the people that are red or yellow? And it's like, okay, wow, actually, we need to build this trust by like actually having a retail presence, showing that having billboards. And it's like, it wasn't around the reach. It was about that actual conversion of trust around like, we are a real company.
Yeah. And it's such an important part, that kind of trust. And are there other ways to not necessarily be a mega brand that you can create trust? And one that's kind of stuff that we help consult to our clients on is, part of the journey. Where does this fall in the journey? Have you given any trust layers to the individual before you just ask for their login on bank account? Are you offering other methods to access the data? Are you asking can you allow the individual to email the bank statement or to provide it over USSD or over WhatsApp? So that's not just saying like the only way we're getting your data is by logging into your bank account. To me, that one kind of screams like something dodgy is kind of happening in the background. But we've piggybacked on that trust, and I also have to acknowledge that we're piggybacking on other people's work that have done in the space. So one of them being Ozar, Ozar being the open banking payment platform. They were, leaders in the market around open banking payments. I didn't even think it was called that back then when they started the business, but they've created, a trust of this process in the market already. So we're piggybacking on them as well in that regard. I think, the other step that you passed on is like, what are we extracting for the FSP? So we are providing the information for the FSP to do the affordability. So that data is coming to us and we're passing it on to the FSP.
Okay, so they're not actually doing the affordability assessment, you are.
Well, the data is coming to us. We're giving them the insights that then help them to do it. So the data comes to us. We get all of the banking transactions. We categorize your main income. We categorize all your debit orders. We categorize your school fees and all that kind of things that are required by the NCR to do an affordability assessment. And then we pass that information on to the FSP to run it through their algorithms so they can come out with a quote for the individual.
Okay, so in essence, the problem that they have is about the fact that they're getting all this data at volume, but it's very dirty data. And the need to go in and they need the clean data because obviously, like you say, with NCR regulations, they cannot do an affordability assessment without doing this. But there's that level of friction, admin effort that they just don't have, right? And it's very costly for them to do it themselves. Very painful to do it at scale. So they come to you to be like here's the data, please clean it and give it back to us.
Yeah, I mean, often you have to compare about what our process does to what the standard is, and there's still listed banks that have people with a ruler and a highlighter, going through a bank statement and saying like that's the information. Like the world is changing and it's changing rapidly. And I don't want to single out this one, and I hope they're not listening. So maybe this is part that we have to cut out. But there's still mega companies there that are going through a statement highlighting this is the income, putting that into a sheet. This is someone's loan, putting that into a sheet. And this is now what we're automating at scale with clean data.
Amazing. Okay, cool. Yeah, now I get it. That makes a lot of sense. And no, it takes a while. I mean, like again, this is why I love doing this because it's like you live and breathe this so much that it's like to explain this to an absolute normie takes a while because I think your clients get it. Everyone gets the problem, but us normies don't. So if I had to summarize that the problem you solve, the value prop is in essence, many FSPs struggle with the fact that they're able to access data surrounding affordability for their clients, but the processes that they have to actually evaluate that data to assess affordability is extremely inefficient and often very prone to human error. So when they scale and they want to do this, it's very costly to do so. So even the switch now is getting that data validly and accurately at a far faster and more affordable way that you're currently doing it. And that's it.
That's it. I mean, we do internal things, and one of them is to explain this internally to our team about what we do. And one of the tasks that we had is, we gave someone, I think probably my bank statement, because it's the most distributed bank statement in the world. And the quiz was,
No wonder you're multi-banks, because I can imagine you're not comfortable because you wouldn't want to share all of it. It was like, it's one bank account. I'll give it to you.
yeah, go and look into Chris's bank statement, and you assess Chris on these variables, like find his main income, find all of his debit orders, let me know if he's defaulting on any debit orders, and then come back to us and say, here's the information. And it took, I think, on average about 15 minutes for a team that was like hyper focused on doing one single process versus what we were doing in under 3 seconds type thing.
Yeah, that sounds like a very automatable.
Yeah, that's good.
Yeah, very automatable process. Cool. Okay, so I can really deeply understand the point here, but I think what's obviously super exciting now is just the endless possibilities of what you're able to do with that data now. So if you've solved that, what's that core problem that you have for that client? And it really is like convenience is probably one of the easiest things to solve if you're able to solve it properly. If I've got this problem that I have to undertake in order for my business to run, right? But it's just extremely painful. And if there's a more convenient way to do it, I will throw my money at you in order to do so. And that's a great way to do it. But now what you're sitting on is huge amounts of consumer data and information around South Africa. Yeah, what does that mean for you? What does it mean for you now? So you've obviously got that core value prop that's being solved. And actually I want to park that because I still want to continue that question. I just again want to understand the flow of how you get paid. So you mentioned the fact that every time that API gets queried, right, then the FSP will pay you for that. Essentially, what's the exchange of currency for value, right? It's like I'm paying you for you to give me what the cleaned affordability data is. Is that really what it is in simplicity?
That's kind of spot on. And any kind of nuance around that. So once we've got the affordability data on that, they then get access, almost no hold barred, in terms of the insights that we provide around it. So they can then go query, find me all the debit orders, and there's an endpoint that we have for that. Or there's an endpoint for fraud. There's an endpoint for just actually saving the statements, because at our scale we're able to kind of host things in a certain way that scales better than if you were just a small guy having to save all of your PDF statements waiting for the NCR audit. So once we've now got all that data, then it's your playground to kind of go and look for whatever insight that you want on it. So once we get it,
it's also yours.
It's also theirs. That we host
so
for them.
it's still their data, right? So I think that's the question. There's like you have all this access to it, but you can't do anything with it because it's they own the data.
Yeah. There's it's the essence around this kind of data ownership and custody. So we've got every single tenant has their own data lake that they're working with that we can't kind of commingle. So just because you applied for product at Discovery and now you're going to do it at ABSA, doesn't mean that because it's in our database, it kind of crosses over. That's just not the way the world works. So it's their database. What we can do on it is ways to figure out ways to use all of that data to enrich the insights that we can provide to our clients. So I can't take the information and say, cool, I now know that Cam earns X amount a year and therefore he's really well suited to BMW. And I'm going to market you a BMW. That's outside of the scope of what we can do.
Sure. No, that makes sense. Because I think even if the fact that they're owning the data it's naturally the nature of the need changes. And so now the way that goes about being solved changes as well. Like the first one is because it's very automatable, easily solved through tech, and amazing. Again, well done for doing that. I'm still curious about the scale that you're at. But the next point is around, well, now that all this, how do we enrich this data? That sounds like something that would be solved predominantly through consulting. And data engineering. Is that something that you're doing? Is there a product there? Is there a service there? Is it something that you're not looking at right now? Because it's just the next step on the value chain, really.
100% that is the next step on the value chain. And I think we've gone about it quite organically. So the very first step was creating value through categorization. So again, better, clean, concise tag data that people can do more with. And lots of our clients are using our categorization engine so that instead of just getting 4 categories, which would have been income, expense, debit order, I think salary or something like that, we're now able to break that down into 36 categories. And hopefully that moves into a world of modeling around behavior, which is kind of where we probably take the conversation. So, you used your example of how discovery is asking you about these uncategorized cases. Is
Or I actually get punished if
also,
I don't categorize it for them.
if you don't categorize it, but there's some discovery data that I wouldn't necessarily want to categorize. And we've gone and labeled that as entertainment, which you can read into that what you want. But then once you've categorized that data, there's also lots of other insight that you can slowly start getting into. So spending patterns across portfolio, for example, is, are we able to look at the changes between shopping patterns between KFC and Chicken Licken over time? Because what we've got is a very kind of constant and growing base of people coming through our platform. So using that, are we able to depict changes in spending patterns? Are we able to pick changes in geographic kind of areas? And beyond that, we're also able to start using portfolio analysis to understand elements of fraud, as well as building out models just based on transactions that highlight an individual's propensity to pay.
I'd like to pause here for a moment to talk about why it is that we run the Founder Files in the first place, why we've done over 100 episodes, and why we have no intention of stopping anytime soon, and how it is that we go about actually funding this so consistently. And to start off with, the purpose of the Founder Files is to give established entrepreneurs practical stories and insights from people that have been there before, so you can avoid years of trial and error in scaling your own business. And the reason why this is so important to us is it relates very directly to what the purpose of Metavolve is, which is the entity that funds the Founder Files in the first place. And that is to accelerate the time it takes for entrepreneurs to build businesses that are able to thrive without them. Practically, what that looks like is our mission statement to ensure that as many founders as possible can take a holiday where they actually switch off whilst their business keeps growing. And the reason why this mission is so important to us is because as many entrepreneurs, we built these businesses to potentially work less, right? Have a sense of freedom, but we found ourselves working harder than ever. And we thought when we conquered these original problems around survivability and getting to product market fit, we then achieved growth. And then the nature of the problems that we have now fundamentally changed. And we found ourselves working harder than ever, right? We're working longer hours, we're making harder decisions, people are coming to us, we're having to put out fires, and it can feel so intense and we're constantly getting pulled back into operations because of the fundamental reason that no one knows our business like we do. And this is where Metavolve comes in. We use strategy as the process to really download all of your knowledge, all your thinking about your business, about your market, about your product into your management team so that they can be empowered to execute while you focus on growth or frankly, doing what it is that you want with your time. So if you want to hear more about what Metavolve does and how Metavolve can help you attain a new level of freedom in your scale up, then click on the link in the description below and let's have a chat and a curiosity call to see how I can share some of the insights I've learned from working with and interviewing over 200 business owners in the past 3 and a bit years. But that's it from me for now. Let's get back to the episode. Cool. Okay, Chris. So it sounds exciting. But also I think, the possibilities are quite endless around what you can do with this information. So before we get into the scaling challenges that you're at now, what is the level of scale that Finch currently is at now? I mean, you mentioned 16/17/18 employees. Talk to me about how can we get an understanding of scale besides that and 75 FSPs that you plugged into?
It's kind of over 200,000 queries per month is kind of where we're running at. So I think the kind of transactions in the team is probably a good proxy of where we're at in terms of size right now.
Cool. Talk to me about scaling challenges, right? I guess also, even with that, I keep bringing this up, but then go back to a different question because I realize there's something else I want to know before going into that. Product market fit, right? Talk to me about that journey, right? Because obviously the scaling starts once you've really figured out your value in the market. And there's this debate around problem solution fit versus product market fit, all these relatively abstract concepts. But at the end of the day, for me, it's when the nature of the problems change from we're trying to survive to the growth problems that we're now having to face. Talk to me about that moment and that chapter.
Cool. So I'm going to focus on the kind of API marketplace gather, because I think that's probably the most relevant in terms of the kind of product market fit journey. And I think, one of the other elements that you use there is like market solution. And our very first client was an enterprise. And it's great when you kind of can convince an enterprise to trust you on the very first iteration of you doing something. But at the same time, your learning curve is going to be wildly steep, and they are very demanding of you, your product, and your team. So I guess the next question is, when did we find product market fit, and what did it feel like? So yeah, we kind of organically kind of onboarding clients, people coming to us doing outreach to them, and it kind of working. But where I felt that the product market fit really started coming in was when people weren't just calling us and saying like, do you guys do this, as a kind of question. It's rather, we see you do this. This is something that we need. Can we partner with you for it? And that for us was like the type of tipping point in saying that we actually have a product that has the right kind of functionalities and tools, that it's not just us iterating every single time that a client wants something. It's now at a kind of point where the set of tools encompasses enough for enterprises or just SMEs or whoever it is to come to us and say, what you've got works. Let's get going with it.
100%. Yeah, that's a crucial part in the journey for any founders. Really gets that point of, I get it. I know a problem solves. It's credibility that it solves that problem. I'm ready to buy. Or I'm ready to consider. Let me put it that way. It's a great place to be.
I think also, I think understanding that product market fit, I think, is later on than most people think. I think, that solution fit, like, yeah, you're solving a solution, but has this really productized to a point where you're not just giving a solution, your product is there and scalable beyond just iterating every single time. So if you were to talk to me in those early days, I would have told you you definitely had product market fit. But, looking back on it now, there is definitely like this tipping point in saying, okay, cool, this is now a product that we can sell, rather than building niche stuff every single time.
Cool. So, all right. So we've got a sense of that. Got a sense of your scale. Right. Talk to me about we've teased it right in the beginning. What are your scaling challenges that you're currently going through?
Yeah. So, hopefully, like most other people listening or people that have been on here before, this isn't pure kind of easy sailing, and not everything is hunky-dory all the time. We do have lots of issues that we're going to have to muddle through. And I think in our conversations, one of them that we spoke to was, how do we manage the scaling API marketplace gather versus the legacy businesses that we've got? So the kind of problem here is you got these legacy kind of comparison websites that are making money. They're doing okay. It takes up probably, in terms of our team's time, 7.5% of our team's time to kind of really work on it and focus on it. And the rest is all focused on gather. But every single conversation that you're having or dialogue that you're having, you still got the overhang of these legacy products out there. So what does one do to manage how that fits into your strategy, or how that fits into your effort, or how that fits into your revenue goals and KPIs? And that's definitely one of the kind of challenges that we're going through right now. And I think what makes it even harder is that often you've got clients that are using all the products at the same time. So it's not as though, you've got a totally different set of clients over here and a totally different set of clients here. We'll often have clients on both sides. And at the start, we saw that as an opportunity, saying, cool, well, we got all those FSPs over there. Surely they just need our product over here. Great. We've got the kind of connectivity. Let's go. But at what point in time does one degrade the other? At what point in time does the focus on other impact the growth of the kind of core. And those are kind of one of the problems we're going through at the moment.
Yeah, that makes sense, because even when you were describing it, like, you've got these legacy products, 7.5% of, developer time going towards this. The one product is scaling. My main question was, well, why not just cull them? But then again, what makes it difficult is the fact that it's being utilized by the market. And then also, because it's such a small percentage of attention going towards it, it's one of those things where, I saw recently, and I'm going to butcher this, but like, it was really wise. But the problem is, it's like, when we have certain problems like that are just niggles, we'd actually be better off if we were in more pain, because then we would actually be motivated to do something about it. Right? But it's at that level of, it's like, it's good enough. It's carrying on there. 7.5% of attention. Market's still using it. It's like, don't really, like, there isn't this sense of urgency to really have to make a hard decision about what we're doing here.
Yeah, and a layer onto that is that they're also cash flow positive. So, sometimes money is money. And you're kind of spot on. It's not eating enough of our kind of bandwidth to really say that this is wildly distracting. But at the back of the head, there's that niggle element that you spoke about, where it's in all of our team's head that there is this other thing that needs to be thought about and worked on at some point in time.
So then I'm going to double down on the question. Like, I'm not really understanding what the problem is, right? It's cash flow positive. Your clients are using it. It sits in a stack that your other products can work on. A bit of attention. Why is this a problem?
And so I think it's a problem from a kind of focus perspective. I think as young entrepreneurs, one of the things that we've learned is the benefit of deep focus. Having erred on the side of not doing that for a long time. And are we able to provide enough deep focus to the scaling part of the business without this niggle in the back of your head all the time that, maybe it takes up 7.5% of your time, but it's still in the back there. You have a down month in one of the marketplaces, and you still have to ask yourself, like what can I do next month to compensate for that? And is that little bit of thought detracting from being hyper focused on the core problems at hand? And that's where it really is at. And I think we've come to the same kind of points of view in terms of our strategy, that it's going to remain there probably until something really, really hard cuts it off. And I don't know if we're making the right decision, but your analogy earlier is kind of spot on. It's not hurting enough to kind of absolutely cull it, but also at the same time, it's in the back of the head. So how much time is our finance team going to spend on invoicing for that business this month? It's just little bits and pieces, and it all adds up at the end of the day.
Yeah, no, it does. And I think the most finite resource that we have is our attention, not even our time. And I think the point there is, like, especially when you start scaling a business, return on attention becomes an important thing. I've never actually worded it that way before, but that would be a very interesting thing to measure. But really, it's like that return on attention is very different, because let's say you're in the scale point of going from 200,000 to 2 million transactions a month, right? It's like that's 7.5% to kind of get you there. It's very different to the return on that's going to be very different towards other products. It really is like this point of where is it that we're applying our attention towards. But this is also where I get curious, and this is why I like to think about like organizational designs and structures, because it's like this: whose attention at the end of the day is being applied here, right? And so, actually, talk to me about your team, right? How is it that you separate this attention around where you focus? Is it entire like everyone's responsible for all of our products and all of our market, or do you separate this?
Yeah, I think you're probably going to get some of the good juicy insights, and maybe it's not the insight that I should be sharing, but I'm happy to share it, but maybe it's a bit embarrassing. But obviously Mike and myself as the kind of co-founders of the business, then we've got the other 16 team members, and in terms of focus, the focus distraction for the marketplaces is primarily Mike's, myself, and one other employee. So we have one employee that's kind of full-time in terms of the marketplaces. And then the kind of distraction is Mike and myself. And then on the fringes, financing, or sending out an email campaign. But that is minuscule. When we're talking about the focus, that's myself having to go meet with one of the partners to discuss growth opportunities, or Mike having to think of a new way to monetize something within the business to kind of grow it, because we missed a kind of budget on the last month. And that's the attention of focus. So yeah, it's probably Mike and I that are deviating our focus from the core to kind of manage the rest.
Okay, that makes sense. That's usually where the pain point is going to stop. And that, like, as the leaders and founders of the company, is like there's always going to be a knock-on effect in terms of where you focus. So talk to me about, like, one, what is that core that you mentioned, and then two, what are you currently doing? If you're very aware of this problem, what are you currently doing to solve it?
So the core of the team, we've got a finance team, which is currently one, but is going back to two. We've got a marketing and brand team, which is two, and sales team, which is two, and then the rest, and then we've got an operations team, which is also two, and then the rest engineers. So kind of focused in terms of engineering and sales. So in terms of where we're scaling the team, and those two kind of elements, and then operations are really sales and operations.
Essence.
But then, in terms of the other elements around operations, which is, scaling at a different rate, it's really managing kind of customers, onboarding, and also our kind of efficiency of our engineering team. So we're very lean for what we do, or we feel we're quite lean for what we do. We probably punch above our pay grade. But yeah, that's kind of the core of the team and what they're focusing on at the moment. And I think we've been very lucky along the way to pick up some rock stars in what they do. And I think maybe one of the other fascinating things for people to learn is one of the kind of complexities around high performing teams, or I don't even say higher performing teams, but like performing teams, is young, smart people want to grow, and they want to grow quickly. And how do you manage all of that within his business that's also growing? And these are kind of complex things that you have to kind of work around. So, when you're talking about increases, you're not talking about like inflation adjusted increases. Like, these are young, smart people that are kind of pounding the streets and doing big things. So just also understand that if that's the cohort of people that you want to work with, your business is going to have to grow at the same rate that they want to grow, which is a challenge in itself.
100%. So I definitely want to get into the people side of things, but because I've asked you a double-barreled question, I'll ask the second one now. Is you're very aware of this problem of this split attention that you have, and where it is that you are focusing. What are you doing about it?
I think Mike and I try shield as much of the team from it as possible. And I think that's maybe just the nature of ourselves. So yes, they are helping us out with, standardized tasks around it. But it's typically not the type of work that you need to be deep thinking or really strategic on. I think Mike and I will try carve out that capacity for the team to go focus in terms of gather, and then Mike and I will focus on Finch and Funding Hub respectively, and try shield the rest of the team from the elements that we're doing there. I think that's how we try and manage it. I think some of the tricky parts come in is, how do we report that back? So you have to talk about how those businesses are performing to the team, what you're doing, what you're winning at, and how that information gets fed back is one of the tricky things. And then also into the strategy side of things, how does that then get communicated to it? And, I do still believe that there's a very potentially a strategic element to it, and you can narrate the story. And it definitely hasn't been built the story hasn't been built just to fit those two. But it's not just as concise as scale API queries, because that could just be what gather marketplace does. Like that could be just the kind of clear goals, scale, gather queries. But instead, we're now also having to talk about winning new affiliates to send leads to our platform, and just those kind of nuances. So we manage it by shielding, and we probably do our best to communicate to the team about what we're doing and not doing, just so they have context around it.
Gotcha. So on that point around, there's the challenge that's multifaceted, right? You're obviously protecting the team from too much complexity or uncertainty, ensuring focus, maximizing growth, dealing with, ambitious, smart people. What are the challenges and quickly growing and building out the team that you're facing?
I think the first challenge is, do we really want to build a large team? I'm blown over by some of the revenue per personnel metrics that are available in there. And I think, OnlyFans is probably the Pangaea for what they do. And I'm sorry that I'm mentioning OnlyFans, but they have 15 employees. And Telegram, I think, also has like 11 employees. So these are hyper-scaled companies that have been able to do it on very few employees at the time. And don't get me wrong, I'm sure there's some kind of contextualization about pushing out services and all these types of things. And maybe OnlyFans is just so profitable that they don't care about if they're losing 3% to the payment gateway, so they won't build their own payment gateway. But it needs to be taken with a pinch of salt. But there's part of me that is in awe of businesses that are able to scale with as few people as possible. And that doesn't mean pushing our team to the ultimate limit. What it does mean, though, is being very focused about what we're doing so that we can manage the human resources in that type of way. It is about optimizing the team in terms of structure so that they are kind of well aligned in terms of the goals that they're coming out to. But then also knowing where breaking points are. And this is, one of the other things that we need to think about is if you don't have a big team, there's key individual risk that often kind of creeps in. And at the same time, there's also breaking points. So a good example of a key individual and breaking risk comes into our kind of technical support side of things. So we're very fortunate enough to work with a guy that's been with us for a hell of a long time and probably knows the product better than some of the engineers know the product. And he's built himself into a kind of key point. But as we bring on more and more customers, he can only scale in a linear manner. So where do we start thinking about employing someone else to augment him? And how quickly do you have to do that before the breaking point hits? Because that person's still going to have to upskill and get there. And you probably have to go through an iteration of getting that wrong at the same time. So there's this kind of paradigm that, we're working with, which is like, I don't see employees as a vanity metric. I kind of don't want employees as a vanity metric. I don't want to have to say that I've got 20 employees reporting to me. I want to make it as optimal as possible. But at the same time, it's about then being efficient enough to know where the breaking points are so that you can manage those breaking points before they come rather than when they come.
Yeah. No, I totally get what you're saying. And just to the point around the example of like OnlyFans and Telegram, right? This is where network effects get built in. And I think network effects are extremely difficult in B2B businesses. So the reason why those businesses are able to scale so effectively is because, one, the value prop and the niche that they have is so clear and obvious, but it's the onus is on the consumer or the customer to be able to utilize it. And then the network effect comes with the more people that use it, the more valuable it becomes. So it really, the onus of growth and scale actually happens within the market because there's very little that we need to do here. But especially in B2B, it's the customer service element that's always going to be a key part of it. And also customer onboarding. Like Apollo, right? I think there's an excellent example as a CRM prospecting software I'm currently looking at. And they've got the most amazing automated onboarding feature where it's like where it takes you to extremely intuitive, and it's a very complex system. But I'm busy like learning how to do it. They've got all the videos, and that's how like you're able to reduce that from a team perspective. But there's still never going to be 15 or 11 people, because you need to manage a learning management system now. Like, I mean, we're meant to be like a prospecting software, but we have to have an LMS, and we have to have someone that's creating content. And whenever it gets updated, we need like good like video production quality, and like we can outsource those things. But like there's just so much like a business needs to do to manage customer experience, especially in B2B realms, that in businesses where it's as simple as a login, and I am responsible for my experience based on what I put on my profile and how I navigate the social network. Once you get that right, it's extremely scalable and easy to do so without people. But if the onus is on the business to guide people through the quality of customer experience, you're going to need people.
Yeah, look, we're already at 15 and we're not making nearly as much money as OnlyFans. So don't get me wrong. I kind of understand that we're not going to be able to live up to that standard. But it was more just a narrative around trying to do more with not just throwing people at the problem is kind of what we look at. And one of the good examples you spoke about there now is just like the onboarding process. So historically, the onboarding process has been hyper personal. It is Chris, myself, or Jamie taking you through the API queries and how this integrates, and talking to you about whitelisting and showing you all the data that you can get there. And now the next iteration that we're going through is providing content that can hopefully, and we've got lots of written content, but humans don't like reading. So we're moving into the world of kind of video content that kind of helps out that process. And I'm not saying that there won't be the human in the middle. There definitely will. But is there a world where the person watches the video beforehand and it cuts that onboarding call from 30 minutes to 20 minutes? And those are the kind of things that we're also going to focus on, rather than just play people for it.
Yeah, that makes a lot of sense. So as a founder, right? I mean, besides this, going back to the attention problem, but I think the point there is like that's the strategy and growth related one. Talk to me within the business, right? What's occupying a huge amount of your time that you would prefer it didn't?
So I think maybe a bit of legacy, and also what I'm good at is historically in the business, I've done what hasn't been done by the rest of the employees. I'm the stopgap where you throw me in and I'll do a 75% okay job at it. I'm not saying that I'm going to be the best at it, because there definitely are better people than me at lots of things.
Chief problem solver.
And I'm chief problem solver. And I guess, one of the ones that I'm kind of deeply involved in now is in the operations team, and that's kind of guided around technical support and onboarding customers. And why I've been there for a while, because just the kind of trying to be hyper focused in terms of understanding what our clients are going through, so that before the journey from market solution to market fit was one of iterating that role until you got to a point there. And right now, it's also understanding the pain points that other people are having, not necessarily from a product roadmap, but from a kind of technical improvement roadmap. And I found myself there, and I think I had a drink with one of my mentors the other day, and I was telling him what I was going through, and he sat me down and he's like, Chris, at the point where you need to bugger off from customer support. You are now wasting people's time just because you have this desire to please everybody. And maybe that's a kind of a personal nature element to it. But I hear a problem from a client, and I'll give all my attention to it. So an example is, a few weeks ago, a client that has somewhat been using our software, but not necessarily at scale. They're still waiting to do kind of full integration, and it's on their roadmap, but it's not there. And I was like, well, flip, why don't I why don't I give you a front end solution that you can get the information quite quickly. It will be the bridge between now and your integration, but you'll use the product at more scale than you're using it right now. And maybe it was also to please me because I like problem solving. So I jumped into it. I spent lots of late nights working through it. So I built them something that functionally doesn't look great, but it flipping works. And that's really cool. And it's really nice to see them working on it. But after reflection of about 2 weeks of work and being kind of sleep deprived and grumpy, the realization was that client pays us about 5,000 rand a month. And was that effort really worth my time? Yes, I got a lot of like self-satisfaction out of it, but it definitely wasn't the best allocation of resources. I dropped the ball in other places because I was sleep deprived and grumpy. I'm now still working through a backlog of work that maybe I could have been more on top of the ball to get through then, but just this absolute desire to please and do anything and jump through hoops. And again, I'm not saying that that's the only reason. I also got some self-satisfaction out of it, but that led me down the path of doing this. And where I'm at the point where I know that I should be moving away, but I'm finding it kind of hard. That's one control freak type of side of things coming out. And it's not a control freak from the lack of trust. I think, the team that we have there is absolutely brilliant. And again, they're better than me at it. But it's this control element of, I've worked so hard to build up the space of customers and we want the scale to come through and all this kind of other stuff that I'm just like averse to the chance of losing someone. And that's kind of it.
That makes sense. Would you like, I have an opinion on this.
I'd love your opinion, please. Yeah.
So I think don't be too hard on yourself, because at the end of the day, what makes many entrepreneurs succeed is that they're absolutely obsessed with customer experience and they're obsessed with solving their customers' problems. Right, that's it at a fundamental level. So you might want to write that off as people pleasing. It's the reason why our companies exist is because we have customers, and the reason why our customers stay is because they have an amazing experience with us. So I think the point there is that it makes me also think about the difference between a strength and a weakness. A weakness is simply a strength that's pushed too far, right? And I think that's it. Like it seems to be your greatest strength that you're able to apply within the business. I think your mentor is very right. I think to step out in terms of leading the company is obviously crucial, but I think the question I have is, how do we utilize that strength to ensure that we are completely maximizing customer experience within our operations, making sure that we've got extremely satisfied customers that can keep coming back to us, but also ensuring that there's these feedback loops where you are aware of what these problems are and what these queries are, and then finding the right ones to solve, and the decision making around how to handle that. But then the challenge comes down to is also having boundaries. So like where you have those boundaries with your customers in terms of like, I totally get that, and how to manage that little bit of point where you're basically saying, I'm adding loads of value to you, but I'm not solving that, right? And I think that's the challenge to go down to. But I think at the end of the day, it's really those boundaries come down to where are we focusing, where are we growing, what problems are we best at solving? Because I think the risk can come in is that exactly there is like we can solve all these problems and we might get a kick out of it. It could be shiny shit syndrome and it could be really exciting opportunities, or it could be solving a problem for a 5,000 rand a month client. And the challenge comes in is it's like, well, you never know what might be. It's like they're solving that problem might have this huge breakthrough that's a completely new product to go down. But it's the kind of that decision-making process around where are we being deliberate about growth and managing our impulses to focus on that. So that's the second part, but the first part that I just really want to reinforce is what you seem to be considering a weakness, I think is a strength.
Nice. And I think, yeah, and I'd love to think that all our customers are super happy. I know that's not always the truth. We can always endeavor to do more. But yeah, it's been a really good journey, kind of understanding the kind of product and the customer cycle from that side.
Yeah, 100%. So what other scaling challenges do you have? I think we've got enough time for one more. Talk me through what is, besides the ones we mentioned, what is the biggest thing that you're still figuring out about scaling?
one of the next kind of parts of the problem that we're going through right now is what parts of the market are we going to go and eat? So you can think about the financial services world. You've got mega enterprises all the way down to, probably a 2-man business type of thing. And there I am, having just spoken probably about 30 minutes how people aren't the proxy for size, and I just used it. So excuse me for that. But you've got this whole that kind of wildly different kind of customer segments that you're going to go after. I think we've been very focused in terms of the middle and what has that kind of customer look like. It's typically a large institution that has technical capacity, that it has a technical roadmap, that has a problem that they want to solve. And that's kind of who we've gone after. I think we've been lucky to onboard enterprises along the way. I don't think we've necessarily been targeting them for that. But where we're at right now is we've got a product that can solve the same problem for the 2-person business, but it can also solve the same problem for a massive enterprise. But they're very different kind of businesses to go after. So if we're going to go after the 2-person business, and I often reference the number of registered credit providers as a proxy for how big the market could be. It's like 16,000 or so. You're going to have to build a product that is working for 2 people to use it, where maybe they're not doing 20,000 bank statements a month. Maybe they're only doing 20 a month. And are you able to create value for them? The kind of data that we're getting from the inbound traffic tells us that the desire for the product is there. We just don't have, or the desire for a product is there. We don't have the kind of packaged product that would work for them. And then on the same side is, these conversations with large enterprises where what we have solves the problem for them. But their roadmap is 6 months, lots of conversations, and a whole kind of different paradigm that we're going after. So, also again, having profitized over being hyper-focused, I'm now going to say that we are doing the inverse of that. And at the moment, we're kind of going after or trying to assess the opportunity for both. So we're trying to assess, is our value proposition really strong enough for enterprise, and are they going to be using our services in the way that we want? And what does that product really look for them? And that product is different, is maybe not integration different, but it is different from a support, engagement, pricing, and kind of strategy. And then at the same time, this quarter, we've got a kind of a objective to understand what those mom and pops would want in terms of the product, and whether it is scalable enough, and whether we have the competency to go and build that out for them. And, it's one of these moments of branching out quite quickly where hopefully we come back and snap back into focus. But right now it's kind of assessing both of those layers of the land. And I'd love to say that I know it intuitively off the bat, but it's one of those ones where we need to know before we can make the decision to focus back down again. And what that means is being unfocused for a period of time.
Yeah, I think the summary of that, it makes perfect sense, because the most important thing that someone in the scaling phase needs is focus, but it's also one of the hardest things to get. And the way I like to think about it, I'm still formulating my own thinking around this, is that when you're in really kind of startup mode versus scale up mode, it's about how is it that I'm solving this problem for this customer, and doing that repeatedly in order to be able to get value, right? And be able to make money. That's the kind of business model that you're trying to find. Now, the next challenge comes after that in terms of that. Once that problem is then solved, the amount of weight, because that's not a growth problem. This is a finding value and position in the market problem. Once that's solved, the ways to grow this thing become, I'm not going to say infinite, right? I'm not even going to say thousands. I'm not even going to say hundreds. So there's many different ways to grow the company at that point. And so that's where the real challenge comes in, where it's so normal, and it's every growing business goes through this. It's not just around can we grow? It's where should we grow? It's this difference in the word could and should. And of the million things we could be doing, with a few things that we should be doing. And it's this difficult point around figuring out where to focus, because the nature of the problems now are very different to the ones that kind of got you here. Big reason why I do this podcast is because a lot of people go through that.
I think you've hit the nail on the head, but I think one of the other elements is the change of nature about how you go after that is, on the journey to product market fit, it's just like guts, intuition, engagement, iteration. And that's kind of what gets you there. And now when you're assessing these other opportunities, maybe you've got the point of breath, not to just jump in, but instead of being what is typically relatively reactive, is you have to start becoming proactive, which is a whole kind of change in terms of culture and ways of thinking. And that's one of the things that we're trying to do as a team, is move into like a much more proactive way about thinking about problems and solving about problems. But it's this shift, and people that we hire, myself included, we thrive under fire. We dig it when we're being burnt, and we have to get things. But the kind of important transition and watching people move into it is also, it's cool to watch, but it's not necessarily easy to do. So we use objectives and key results as a methodology of kind of setting out our initiatives. And it's weird to think that for the very first time, 2 of our objectives are just research based. Like that's kind of crazy. It's like Mike and I battle to wrap our head around it. It was like, how unproductive are we now that we're putting 2 objectives solely to researching something rather than just doing? And that's kind of tough.
Yeah. And I can 100% understand that, because it's the point of innovation within growth. And the question comes back to is like, what is the growth strategy, right? And the point there is it's that the natural thing as an entrepreneur, specifically encountering scale now, is that what is the growth strategy that always worked for me to get to this point? Is having multiple irons in the fire and experiments and seeing what's going to work and then taking that. And so the same thing is being applied now in terms of, well, it's not just around different ideas, value propositions, solutions. It's actually different growth strategies. It's like, am I going to diversify in terms of going into related markets with a similar product? Am I going to start new products completely, right? Am I going to expand geographically? Am I going to go deeper in this market? Like, the challenges that you're facing there are growth strategies in themselves, right? But the approach there is that this is where shifting into scale-up territory is the methodologies to deliver these things end up becoming more scientific rather than intuitive and experimental in nature. And it's definitely, to your point, it requires a lot more proactivity. It's a complete shift in behavior. It's a complete shift in thinking. It's a shift in culture. And it's as much as an exciting place to be as a business owner, because it's like, okay, cool, I see the numbers going up and like, oh my God, I can actually sleep kind of at night. But it's like, it's fundamentally different to what it's ever been before. And which is, reinforces why I love doing what I do, because the problems are similar, but it's never the same because every company is different.
Awesome. Yeah, you're spot on the cam.
So Chris, the final thing that I want to know from you is what does the future hold for you? I mean, so we talk about the near-term future being one of hunting for focus, right? Talk to me about maybe the rest of 2025. What's your view and outtake for the year?
So Cam, I'm going to kind of answer the kind of question in 2 parts, because there's obviously kind of the business part and then there's a personal part to this as well. I think this year I've got personally kind of some really big life events coming. I'm going to be a father not too far away, and that in itself is just a really big 2025 event, and one that could consume all of me. So part of the personal evolution is going to be around changing from the core kind of element of my life being relationship with family and wife and business, to one that's probably much more focused around wife, child, and business. And I'm going to have to learn a lot through that. And the conversations that I'm having with my wife kind of let me know that I'm going to have to learn a lot about that. And then in terms of the business, I think, we're just so excited to do what we're doing now, but better. We've got a roadmap for what 5 years looks like, what 2 years looks like. But 2025 for us is the year of perfecting what we've got. So we've got a product that's working well. We got a strategy around data that's going to kind of take this business to the next level. And as soon as we kind of perfect that, then that earns us the right to move to the next level. So we're going to be diving down, working in terms of perfecting Gather and growing clients, which is kind of standard. So we get kind of having to say that, kind of building out our data team and the insights and tools that we're able to provide around the data. And then where I want 2025 to come is, I use December as a kind of a reflection point. I think as entrepreneurs, we're just so busy that it's really hard to often be present, let alone reflect. And there's that 16th of December, I write an annual newsletter. It's a letter to myself as well to stakeholders within the business. And what I want to be writing in that letter is, we perfected it, we've earned the right to move on. So that's 2025 for me.
Yeah. If I may summarize, it sounds like that on the business side and the personal side, it is a year of entering new life cycle stages.
Yeah, it really is.
Well, it's an exciting place to be, man. Yeah. Final question. What's the one question that I haven't asked you, that I should have asked you, that you'd like to answer now?
Typically podcasts end off with something philosophical. So I guess the question could be, why do you do it? And answering a question that I've created myself should be one that I'm really prepared for. So excuse me if I stutter through this, but why am I an entrepreneur and why do we do what we do? So I think the first part of the question is why I'm an entrepreneur is just, it's exciting. You actually are making an impact, if that's to your clients, if it's to the industry, if it's to your employees. That like direct change that you're able to see is so visceral and rewarding. And don't get me wrong, there's really crap times, but when you're able to kind of lift your head up the parapet and see the good, it's epic. And that's why I'm an entrepreneur. And why are we doing what we're doing? I think, there's a massive problem that we want to solve as Finch. Our financial services landscape is one that is too expensive and sometimes not attainable for everyone. So while at the start I said South Africa's got this brilliant financial ecosystem, some of the kind of products are just unattainable to our demographic. So is there a way through technology and data that we're able to bring the cost of what we do down, as well as leveraging data to allow businesses to make better decisions so that we can make it much more accessible for everyone in the South African market? Then yeah, that's what we're here for.
Love it. Chris, thank you for being on the Founder Files.
Cool, Cam. Thanks so much for this. It's been a epic chat and yeah, excited to see how it comes out.
What Chris is going through with Finch is probably one of the most normal experiences that founders will go through when getting into scale-up territory. Don't get me wrong, it's quite stressful, and there's a lot of sleepless nights around where to grow the company. But this point around where to focus, right? Where is it that we should be growing the business now? Is a completely new paradigm, and it's a completely new challenge. And it's one that I understand well. I've seen it so many times with people on the podcast. I've seen it so many times with our clients. It's actually one of the main problems that we help people get through. So if you're listening to this and this resonated with you and you're in the same situation where, the business is growing, but you've got all these options in front of you and you're just wanting this clarity of where should we focus our attention, but the confidence around making the right decision and knowing that you're on the right path, this is what we do, right? And I can definitely help you with that. So if you want to reach out and have a genuine, no strings attached conversation, book a 30-minute curiosity call with me or reach out to me personally via LinkedIn. I would be happy to help you solve this problem around really scaling the business to its new heights. Thank you for listening to another full episode of the Founder Files. If you enjoyed this episode, I assume you did, seeing as you made it this far, then please make sure to like, comment, subscribe if you're not already doing so, and share this with anyone else in your network that you think might get value from it or suffering the same problem, right? The whole point of why we do this is to help founders cut down the trial and error in scaling their business. And the more people I can get this to that are experiencing those challenges, the better. So thank you, and I'll see you at the next episode. Cheers.